Hello and welcome to This Week in Review with Nigel Farage. Nigel, before we get to the banking crisis that is engulfing the US and now also Europe, it's of course the big topic that we should be discussing, the budget speech. I can remember way back when you gave your first budget response in Fortune and Freedom. We can almost measure the length of Fortune and Freedom has been around in terms of budget speeches, and there have been plenty of them. So what is your budget response speech to the latest one?
Underwhelming, to say the very least. I mean, extraordinary. Sort of sunny, upbeat, optimistic tone. You would think we were growing at 3% with no public borrowing. I mean, the whole demeanour compared to the reality was astonishing. Let's focus to begin with on what he did say. So we're going to help the wealthiest 1% with their pension contributions just to get a few dozen doctors back to work. That, I've got to tell you something, that is the most astonishing political own goal. Keir Starmer didn't seize the moment, because all Keir Starmer did was read out a pre-prepared speech. Just shows you this guy cannot think quickly on his feet. But Rachel Reeves is out this morning on behalf of Labour, saying they'll reverse it. Expect that to become a major political issue. And it's all well and good, helping the better off, giving the better off opportunities, but you can't just do it for them and nobody else. And that's the political mistake, I think, that's been made here. He basically, you read the small print, his GDP growth is now almost entirely reliant on mass immigration. No, seriously, you won't have read this in today's newspapers because we're just going through the detail. A huge easing of visa restrictions for foreign workers to come into Britain. But on top of that, a net migration figure of 1 million people in the next 4 years. Now, it'll probably be even higher than that. If you take that out, there is almost no projected GDP growth at all. And mass immigration at the lower skills end of the market does not lead to increased GDP per capita. So that's one thing that everybody's missed out that was there. And he tells you it's going to be 11p cheaper in the pub, the Brexit pub guarantee. What he doesn't tell you is, you want to buy a bottle of gin to drink at home, there's going to be another 76p on it. You want a cheap bottle of white wine or rosé to sit in the garden when summer finally comes, there'll be another 44p on that. As for cigarettes, well, I've got to tell you, middle classes being dragged into 40p tax rate. Think about this. When Nigel Lawson established 40p as the top rate of income tax, something interestingly that Tony Blair agreed with and never changed during his time as Prime Minister, 1.5 million people paid top rate tax. Under these proposals, by 2028, somewhere between 7 and 8 million people will be paying top rate tax. So you're looking at senior nurses, you're looking at police officers. I mean, these people were never, ever thought to need to be dragged into top rate tax. So it's a big attack on middle classes. And interestingly, a little warning coming out today from John Lewis. Now, for many people who are getting on in the world, being able to buy stuff for the house at John Lewis is a real aspiration. But if you have less disposable income as a middle earner because of your energy bills, because of the increased burden of taxation, you know what? You're not buying that new coffee maker. You're not buying that new Dyson or Hoover. You're not buying those domestic consumables. So I thought John Lewis's little warning this morning was really interesting about the knock-ons. Big picture, we're paying for the pandemic. We decided to lock down the economy. It's cost at least $400 billion. We're going to be paying for it for years economically, psychologically, in terms of healthcare outcomes. And we have a government a globalist government, that do not have the vision. His opening sentence, this will be a budget for growth, it was anything but. Believe me, it was anything but. Corporation tax going up by 30%. Yes, some write-downs against investment, but that was there before anyway. Nothing new about that. Not good for investment into the country. Stuck with a big state, high tax model for a long time to come. And bizarrely, no mention of what was happening in the banking sector. No mention of what had happened since the very woke Silicon Valley Bank had gone down. And the potential risk of contagion that we see from Credit Suisse, etc. So look, I think very much steady as she goes. Let's keep going where we are. let's give the public the impression that we're very much in control of this and it's all very cool. But be in no doubt that most British people will be worse off this time next year than they are now. And then at the last minute before the budget, they'll try and put a rabbit out of the hat and say, we're going to cut tax in a couple of years. I don't think any of it works. As I say, I think Starmer was incredibly flat-footed. I mean, the jokes were funny, but they'd all been pre-written. He should have picked up on that immediately, because that's Labour's, that would have been Labour's USP. So look, I think disillusion with the budget from Conservatives is going to set in very, very soon.
It made me laugh just quickly that the Australian government has imposed exactly the opposite policy when it comes to capping pensions and the tax-free limit. So they're going in the opposite direction. But the most important part of all this to me was what you mentioned there with the bracket creep, the idea that with high rates of inflation, more and more people are going to be sucked into these higher marginal tax rates. I think it's 350,000 will get hit with this 45% marginal tax rate. This is just another way that inflation is biting. So you've got the rising cost of living and now the rising tax, and also you've got capital gains tax for anything that's inflation adjusted as well. So inflation is really becoming a massive nightmare here. And people are going to feel this in their pocket on top of interest rate hikes as well. So it's also, I think it's all inflation related, and it's all really biting from all different sides here at the same time. People are going to get really upset with the Bank of England this as well.
I mean, even if Hunt's projection, the OBR projection, that top line inflation will be down to 2.9% by the end of the year, which, by the way, I think is wildly optimistic. But even if that's true, people will not feel that much better off because of the increased tax burden, which, of course, is not included in those figures. So you have a different kind of inflation affecting people's income and people's expenditure. I think as far as the Bank of England's concerned, well, look, appointing Andrew out to Lunch Bailey as the boss of the Bank of England was a catastrophic error from day one. And you see from the Bank of England, basically, they get blown around by events rather than leading them. And you've seen that all the way through, with saying inflation wouldn't happen, that it would be transitory. I was thinking about this morning. I wanted to leave the European Union because I didn't want to be governed by their unelected idiots. And now we're just governed by our idiots, some of whom are elected and some of whom aren't. I mean, the only positive I can say is we should have the opportunity to replace them with somebody else. But we're stuck. We're really stuck, with a Labour Party and a Tory party. And yes, Labour will make hay over the pension stuff. But really, you take that one issue out, how would a Labour budget have been different? I mean, legit, how would it have been different from what we got yesterday? I just don't think it would have been.
Well, your friends in the media they would have covered it a bit differently. We had the Financial Times and Telegraph calling it pro-growth, and then we had the Guardian calling it austerity, which is the same combination I think that happened with the last budget and the budget before. Yeah. Who's got it right there? I mean, you seem to be saying it's an awkward in between of nothingness, neither pro-growth nor austerity.
Look, it's a nothing budget. All right, it's a nothing budget. Growth is going to be anemic. What growth we have will be fueled by mass immigration and easing visa rules. As I've said earlier, I promise you, you may not hear this elsewhere, but I'm not wrong about this. I've been through this with a fine-tooth comb. And in terms of investment, I mean, Hunt actually said that we're going to be one of the most tax-competitive business countries in the world. What blimmin' planet's he on? Oh, our corporate rate's not higher than France and Germany. Well, what about Dublin? What about the Republic of Ireland? What on earth is he talking about? And just a little aside that might amuse people. Boris Johnson, whose government introduced the projected rise, the 30% rise of corporation tax, comes out before the budget and says this must not happen. And Jeremy Hunt, who campaigned for the leadership, saying he'd cut corporation tax to 15%, is the man that puts it up. I mean, why would you trust any of these people? Would you buy a used car off Boris Johnson or Jeremy Hunt? I mean, they're just like a bunch of student kids playing politics. Frankly, it's a bit sickening. And it's why they'll lose the next election. And frankly, it's why they deserve to.
I know you are not a big fan of immigration rates. My question to you, though, is whether it gives the UK an advantage in terms of dealing with its debt burden, especially the government debt burden. The fact that we can massage GDP figures by controlling immigration because the UK, for whatever reason, remains a perfectly attractive place to migrate to. Do you think there's a long-term benefit to that?
Look, we've always been an attractive place to come to. We speak English, so it's the world's language, and you come here and it might be a jumping off point for America, or who's to say. It's a very easy, relatively easy place to live. There's a huge black economy. So if you come here with the intention of working outside the law, well, you can pretty much do as you like here if we're being really honest about it. And we have the added benefit of a non-contributory welfare state. A non-contributory welfare state. So you've got the most incredible safety net. Look, we had a big migration into the City of London when I worked there. We had French banks. I mean, a number of French people that came to London. We had French banks, we had American banks. A big bang led to this massive influx of people from all over the world. But these people were not drawing off the state. They were net quite high taxpayers. They added to a body of expertise that helped to make London a very dominant global centre. But I'm talking there about a few 100,000 people. With that particular example, the British population has risen by 8 million since 2001. 8 million. And 84% of that is directly attributable to immigration. And even if as Nick Robinson once argued with me on the BBC on this very point, but Mr. Farage, the economic benefits, I mean, GDP growth is 0.1% higher every year as a result of it. I said, well, I don't care. I mean, goodness me, you would have thought I'd committed some terrible sin. You have to think about the other effects of this, and they're not just economic, they're social, and that's about access to GP services. Can you get your kid into the local school, and all of those things? And I know we are, predominantly here to talk about money and investments, but there is a big social element and dimension to that, not to say also a fracturing of communities, in a way that we've almost never seen on these islands. So nobody will convince me that continuing mass immigration into Britain is making us a happier place, because I just don't believe it.
Yeah, it's that combination of welfare and open borders that I think it was Milton Friedman explained that it's not a good combination. And let's quickly just mention nuclear power. It was classified as green in the UK, which I think is massive news for our readers at the Fleet Street letter as well. What do you make of that change?
At last. I mean, this should have been done donkeys blooming years ago. That was a sensible thing. But the sting in the tail on nuclear from Hunt yesterday was he's setting up a new nuclear authority. Oh, joy. Another great big quango filled up with failed politicians, all being paid a fortune, who no doubt will be a barrier to nuclear development rather than an encouragement. So reclassification, yes, that's good. Not before time. But the idea of some giant new quango never, ever cheers me.
Yeah, that's the mistake the Americans made as well and continue to make. Let's move on to the big news story at the moment, which has almost overtaken the whole budget story, which is the banking crisis that has kicked off in the US and has already spread to Europe with Credit Suisse. You've seen some banking crises in your time. What do you make of this one?
Look, I mean, overall, I think we've been saying ever since the start of the year with our weekly chat that the stock markets look very, very toppy. We've been deeply skeptical about this 2023 rally. You just never know what the straw is that, turns it the other way. How to read contagion, incredibly difficult. Incredibly difficult. I have no idea. I honestly have no idea whether this turns into a full-scale rout or whether it doesn't. Are we about to go through another 20-25% fall in stock markets over the next 2 or 3 months? I don't know. I'm sure you don't either, Nick. It's very, very hard to read, but we can expect extreme volatility. And the likelihood is that once these runs start, they tend to go on for a bit longer than anyone thinks. You get a couple of days of stability, people think, oh, that's fine, and then something else happens and there's a further leg down. So I'd be extremely nervous. And, for my own part, I'm looking at my own SIP. much of which is in cash at the moment because I'm being so skeptical. If we do get the big dip, well, that's a great opportunity perhaps to buy some long-term stuff that pays dividends, etc. But I would be, if you ask me where's the next 500 points on FTSE, I think I'd probably be 6.5 to 7 out of 10 is down.
I want to ask you about the underlying cause of what's going wrong in the banking system. To me, it's government bonds that have fallen in value enormously because of interest rates that have been hiked. That's what made these banks so weak, especially in the US. And then the deposit flight has exposed that. And we know this especially from what's going on at central banks around the world. A lot of them are close to going broke and needing government bailouts themselves. So my worry is that there's, the canaries in the coal mine have dropped dead. And now everybody's wondering, what's going to happen next. But the point is that there's this huge amount of losses that are baked in from just bond prices falling. And the question is, who's holding those losses? Are you worried that the same will occur in the UK at a UK bank? Because we've had UK bonds drop especially badly over the last year and a half.
Well, we saw the LTI panic last year after the Kwarteng budget. I mean, who knew about LTIs? Who realised that because of constraining EU rules on the pensions industry, that they were taking a portion of their money and just punting it? I mean, I didn't know that was going on. I mean, I've always been skeptical about the pensions industry. Nick, your point is very valid. It's not utterly impossible that we're on the verge of something really very, very serious. But all I would say against that is don't underestimate the incredible political power that central banks have in the modern world. They are now more powerful than they've ever been at any point in history. And they've managed to do things over the last couple of decades that all of us, anyone that had read economics, would think is against what the textbook says is possible. So don't underestimate their power to keep the whole thing afloat. But is there a lot wrong with the system? Yes.
Yeah, the challenge here is that the less likely outcome of a really bad crisis starting around about now is the impact is so extreme that you've got to consider that even though it is less probable than things blowing over and improving themselves over the next few years.
And that's why we've seen, quite a lot of money going into gold this week. There's no particular surprise in that. And crypto, isn't it amazing? I mean, the more exchanges that go broke, the more people that lose money, the more new investors keep piling in. Because if you don't trust the existing system, well, gold and crypto is where money's going to go. And I'm not saying to everybody, sell your house and buy crypto. It's wild. But I think the move on crypto, it's interesting, crypto had been moving for the last year or so in line with the other indices, almost as if it was treated as an asset class. It has decoupled over the course of the last 2 weeks. And that is something that I'm going to watch very carefully over the next few months.
Yes, if crypto was a solution in search for a problem, well, it looks like we have a problem. Nigel, thanks for joining us in Different Home. Thanks for watching.